Have you ever opened a stock chart and immediately closed it because it looked too complicated? Red and green candles, lines going everywhere, indicators covering the screen. And then you think, stock market is not for me. If that sounds familiar, this video is for you. Welcome back to Knowledge Grid, the channel where we break down complex financial topics into simple, practical lessons, so anyone can understand them. Today's topic is one of the most important skills in investing and trading: how to read stock charts for beginners. If you learn this properly, you'll stop guessing, you'll stop buying at the top, and you'll finally understand what the market is trying to tell you. By the end of this video, you'll clearly understand what stock charts really represent, how candlestick charts work, trends, support and resistance, volume and price behavior, and a simple chart reading framework for beginners. So grab a notebook, relax, and let's begin. What is a stock chart? Let's start with the foundation. A stock chart is simply a picture of price movement over time. That's it. It does not predict the future. It does not guarantee profit. It only shows where price was, where price is, and how price behaved. Every stock chart has two axes. X-axis, horizontal. This shows time, minutes, hours, days, months, years. Y-axis, vertical. This shows the price of the stock. So whenever you look at a chart, remember, time plus price equals chart. Everything else is just analysis. Why learning charts is important. Many beginners invest based on news headlines, social media tips, WhatsApp messages. This is risky. Stock charts help you understand market psychology, see demand and supply, avoid emotional decisions, time your entries better. Charts show you what big investors are doing, not what they are saying. And remember this: price never lies. People do. Types of stock charts. There are three main chart types. 1. Line chart. Connects closing prices with a line. Clean and simple, but hides important details. Good for long-term overview. Not good for detailed analysis. 2. Bar chart. Shows open, high, low, close. More data. Harder to read for beginners. 3. Candlestick chart. Best for beginners. This is the most popular and most powerful chart type. Why? Because it visually shows strength of buyers, strength of sellers, market emotions. From now on, always use candlestick charts. Candlestick anatomy. This part is extremely important, so focus. Each candlestick represents one time period. Could be 1 day, 1 week, 1 hour. Green candle. Price closed higher than it opened. Buyers were stronger. Red candle. Price closed lower than it opened. Sellers were stronger. Each candle has 3 parts. 1. Body. Difference between opening and closing price. Bigger body equals stronger move. 2. Upper wick. Highest price reached. Shows rejection from higher prices. 3. Lower wick. Lowest price reached. Shows rejection from lower prices. Key insight. Long wicks equals indecision. Small bodies equals uncertainty. Big bodies equals conviction. Candlesticks are like market emotions drawn on a chart. Time frames explained simply. Beginners often ask, which time frame should I use? Here's the simple answer. For beginners. Daily time frame. What? Less noise. More reliable. Less emotional stress. Avoid 1 minute, 5 minute, 15-minute charts. These are designed to trap emotions, not beginners. Understanding market trends. Markets only do 3 things. Uptrend. Higher highs. Higher lows. Buyers dominate. Downtrend. Lower highs. Lower lows. Sellers dominate. Sideways. No clear direction. Price moves in a range. Golden rule. The trend is your friend. As a beginner, trade or invest with the trend, not against it. Support and resistance. This concept alone can change your results. Support. Area where price stops falling. Buyers enter. Acts like a floor. Resistance. Area where price stops rising. Sellers enter. Acts like a ceiling. Support and resistance are zones, not exact lines. Price memory is real. Markets remember past reactions. Volume, the hidden truth. Volume shows how many shares are traded. Think of volume as fuel. High volume equals strong move. Low volume equals weak move. Price without volume is meaningless. Always ask, is volume supporting this move? Indicators, use less, not more. Beginners often overload charts with indicators. This causes confusion, late entries, overthinking. If you must use indicators, moving averages, RSI, basic understanding only. But remember, Price comes first. Always. Common beginner mistakes. Let's protect your capital. Avoid chasing breakout candles, buying at resistance, panic selling, overtrading, ignoring risk management. Charts guide decisions, not emotions. Simple beginner chart strategy. Here's a simple framework. 1. Identify the trend. 2. Mark support and resistance. 3. Wait patiently. 4. Confirm with volume. 5. Manage risk. Simple beats complex. Now you understand how to read stock charts for beginners, step by step. If this video added value, thumbs up, like the video. Pushpin subscribe to Knowledge Grid. Speech balloon, comment what topic you want next.